Hi traders, and welcome to today's ACY Securities Forex Market Analysis. My name is Duncan Cooper and I will be your host. Today we'll be focused on the dollar index and the euro to US dollar. So first we'll look at the news items coming out for the day, and then we'll have a look at the charts. Hi traders, I'm just at FinLogic. Just going to quickly review the economic calendar and I'm just going to apply the filter. Just want to look at the high items coming out for the week. Alright, so I am going to be reviewing the euro US dollar, so I want to look at the news items that may affect that particular pair. So Tuesday today, these times are in Queensland time, Australia. We have the US retail sales coming out at 10:30 tonight, so that could impact the euro US dollar. Nothing there on Wednesday, but into Thursday we do have the US interest rate decision coming out and the FOMC statement. So 4 o'clock in the morning Thursday and 4:30 in the morning Thursday, there are items there that will definitely impact the euro US dollar, so be very aware of those items coming out on Thursday. That's going to impact all pairs, but especially euro US dollar. Okay, with those news items in mind, let's get to the charts. And first up, I just want to review the dollar index, so I'll just move to that chart. And we're on the monthly chart first of all, and I've been discussing that the market has been getting support from these old resistance highs back in 2010 and 2009. This level here is at 89.62. So we can see that the monthly chart is still in a downtrend, but it's not breaking below this old resistance now support level. And for the month at the moment, we just got a complete positive month moving up from the support level. And as we move into the weekly, we can see there's a possibility here of a double bottom forming, which will form a lot of my analysis as I review the euro US dollar. So we've had now 3 positive weeks in a row, and whilst this is a lower low to this low, it's holding on support and is possibly forming now the double bottom. And if that's the case, then we could see this high over the long term being tested. Alright, down to the daily. And all we're seeing on the daily is positivity. We've got 2 higher bottoms and 1 higher top at the moment. This may have just broken through there a fraction, so we could have 2 higher tops, but there's a definite uptrend there at the moment. The MACD is confirming it. So if the dollar index is an uptrend, pairs to the US dollar will be in a downtrend. Okay, so with all that in mind, let's move now to the euro US dollar. And starting on the weekly chart, now I did review this pair back on the 25th of May, and you can visit the link below if you want to check that out. But on that day, I was discussing whether a double top was forming here on the weekly. This is at weekly resistance at 122.43, and since then it was the start of this week just here where I was discussing, and it did come up and retest once more, and then after that week we've had 2 negative weeks. So the pattern's really starting to form now, but there's still plenty of time to get in. The long-term target for the trade or the move down is down at 117.04 weekly support. When I first discussed the possibility of a double top, I was suggesting you could sell at 122, targeting 117.04, the 11700 level, with a 100 pip risk on your stop, with a risk to reward of 1 to 5, which would have been great. And there was plenty of time to get in at that level. So we are a little bit lower than that, but there's still plenty of time to get in for the move down. So just to review, yes, we're holding at the 122.43 weekly resistance here, forming now a double top. We've had at least 2 weeks of a decline. Moving to the daily, and we're seeing the inverse of what we were seeing on the dollar index. We've had 2 lower lows, 2 lower highs. There's a clear downtrend here, and in the short term we'll probably have a rally back up here, but a clear downtrend. MACD is just confirming that, and here's our weekly level my long-term target. In terms of support on the daily chart that we have to navigate, we'll need to navigate 120.51. So price could, as it moves down, bounce at any of these levels. Doesn't mean to say the trend is finished, it will just respect. So we've got support at this level here, 120.51. There's more support down here where it was old resistance became new support. That's at 119.86. And the most current level of support, but we're just forming here, is at 120.92, and this one here at 121.04. So this is just forming, and this is formed here. So the most relevant level is probably this 121.04, which is really the 12100 level that the market's a little bit false broke and it's just bouncing up off. So we'll put that level in as well. So that's the most immediate level we need to break through. So as price does hopefully move further down, it's going to have to break this level of 121.04, 120.51, and then this old level of resistance and support at 119.86. So price will be bouncing at these levels as it moves down. As it bounces, it will rally, and that will give you the opportunity to get in on a rally for the move down as it does do its thing. So moving down, bouncing, down, bouncing, and I always like to sell the rallies. So we're seeing a clear downtrend on the daily. MACD is confirming that. Long-term target down here at 11700 level. So how can we look to get in this week? This is the 4-hour chart. That's last week's high, and this is last week's low. So I'm going to draw a fib across. Now price might not rally. It may rally once the news comes out on early Thursday morning with the interest rate decision. So if it does rally, I like to sell the rallies, and there's the 62% level here. That's at 121.69. There's a bit of old 4-hour support here that could be resistance. But the level that I like better is up here at the 79% retracement level at 121.90. There's 1, 2, 3, 4, there's 5 tops in that area. So price could move up to that level. Let me just draw it in. It's already moving up from its bounce at the 12100 level. So it could move up to the 62. I like this 79% level. Anywhere at the 79% level, even up to the high of last week, which would be at 122.17. Even if we just trade above last week's high, it doesn't negate the double top pattern. So anywhere in this area, if price can get up into that area and fail, that would be a great area to look for an intraday sell, getting yourself positioned for the further move down. Okay, alright, that's my analysis for today. Have a great trading week, and I look forward to seeing you next time.